Hello and welcome to another update video about MATIC. Well, we see a few green candles. If you have a magnifying glass, you might see them. They are so small, but still noticeable. From here even, a little bit of green there. And what we ultimately want to see is a reaction to the upper support area. That would be ideal, and that would keep the overall bullish scenario on the MATIC chart more directly alive. We have an initial 5-wave pattern to the upside, obviously into the December 23 high. We have a wave 2 pullback highlighted in yellow there into the January low, and then another 1-2 setup. So that all did what it needed to do. Unfortunately, we didn't get sort of the third wave direct rally. Sometimes these completely break out and rally directly without any deep pullbacks. The potential was there, but yeah, it offers as another 1-2 setup, which also is good because then in this wave 2, there might be another opportunity to accumulate for anybody who wants to. And there are obviously two bullish scenarios, because if the upper support area breaks, well, it's not really reasonable to still assume that this is a so-called 1-2-1-2 setup with a third wave to come of an even larger third wave. No, we would then move into the larger wave degree, okay? So if that's not very clear, then I just need to share with you that below 70.5 cents, okay, it's not an invalidation point. It's more like if we get a sustained break below that level, it becomes much more probable that this wave 2, which I have listed as completed on the 23rd of January, actually never finished. And that wave 2 is still unfolding. So in fact, we then have a large A, B, C structure. And it might actually not be an ABC. It might then turn into a WXY or something. That's not so important. That's more the academic discussion around it. But I think it's worth knowing that below 78.5 cents, the chart will become less certain. There is never certainty in financial markets anyway, but you have a degree of certainty maybe, you know. It's all about probabilities. So, but those probabilities will become less clearly bullish. Yeah, because at the moment we have two bullish scenarios on the chart. There's one very direct 1-2-1-2 breakout scenario, and one that allows for a deeper pullback in a still unfolding wave 2, which would then just leave us with one bullish scenario. And that means we would have to bring a bearish scenario back onto the chart, offering less clear probabilities for the bulls. So I hope that's clear. So below 78.5 cents, you know, that's for me the main, let's call it pivot point that distinguishes between the yellow and the green scenario. And obviously I favor the yellow one because it would be more, well, it would make things easier for me. And also it is currently my working count, my leading count, the directly bullish wave count basically. So in the yellow count, what should happen next? Ideally a turnaround somewhere here. Maybe the price could go a little lower in the C wave, but we see the first attempts of a rally already. But then again, it might morph a few times. All you should really care about, do we see a sustained break below 78.5 cents or not? And do the bulls turn up before that break occurs, which would be good for the bulls in the yellow count here. Next, we should see the third of a third wave rally. In the previous videos, we said, okay, third of a third wave, if it starts from here, we should actually see it reach $1.94 minimally. Okay, if we go lower in wave 2, obviously it would reset a little bit lower, and then we could restart that maybe from $1. We could restart that from lower, and the target might go down to 175. So the lower we go in the wave 2, the lower the target in the third wave. Bear in mind, third waves can always extend, but first let's see if we actually get there and if we can hold support. But yeah, from here we would, you know, it could take us to $1.95 minimally in the third of a third wave. Then there would be another fourth wave, fifth wave of a larger third actually. Let me shift that. So it would be like that, okay? Of a larger third, then we should get a larger fourth and a larger fifth. So they are not only labels and placeholders at the moment. These labels are not positioned where the targets essentially should be. But yeah, it should take us to sort of, yeah, you know, $2 plus, which seems a very, very good reward to risk ratio from here. And essentially, I'm still looking at a potential $10 bull market target projection. If we get there, I'm not sure. It depends on how long the bull market actually lasts. You know, I mentioned that before, the altcoins, yeah, they could run a little longer than Bitcoin, but if Bitcoin rings the bell and says the bull market is over, the altcoins aren't gonna triple anymore. Most at least won't, you know, there will always be exceptions. So for now, we're still bullish here. And if we look into the shorter time frame, yeah, we have a bit of a rally now, but it hasn't even broken above the previous high. So it's very reasonable that we could get one more low. Why do I say that? Because we can measure the internals here of this structure, and the A wave has a certain length, and we compare that with the length of the projected C wave, and the main support level is here around 76.7 cents. That's just below the yellow box, but would still be acceptable, you know, for a C wave target. Doesn't mean we have to get there. I mean, the nearest support is the last swing low, obviously at 86.7 cents. And then below that we have 82.7 cents. But the thing is, you could say, okay, maybe the low is already in, and you could try a more aggressive trade with a stop below the last low. It's just not very clear yet if it's bottomed, or you just use the entire zone to accumulate, or even the larger zone to accumulate, because below 58 cents, again, they have nothing really reliably bullish left. But for now, still just waiting for an end of this correction. And really what most people should care about, or we should really care about, is, okay, not what's the exact micro count of this correction, because that might morph and change. You know, even this could turn into a WXY pattern where we're now doing another A, B, C, and could still hold support, but it would morph a little bit. So ultimately, we need to care about, okay, when does this chart turn from corrective into impulsive and allows for aggressive trading in a third wave? That's not happened yet. I'll keep you posted. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.